Here are 3 growth stocks that have huge potential, but 2 of these I don't think you've heard about before. But do let me know if you have any of these in your portfolio already or any are on your watch list to add soon. Let's first start with a company that is relatively unknown. But our good friend Warren Buffett has recently become very, very bullish on this one and started building out a position in his own portfolio, and he currently has over 100,000 shares. This stock has returned investors about 116% over the last 1 year, which is of course absolutely fantastic. And if you haven't guessed already, the company is New Holdings. In particular, we are going to be focusing on Nubank. New Holdings is the parent company, but then you have Nubank. And this is a popular banking provider, probably guessed it by the name, in Latin America. Now they are positioned as more of a fintech company rather than a traditional bank, and they are really benefiting from the growing population that has been seen and continues to be seen in this region. And interestingly, Latin America is becoming more connected and more digitalized than they ever have been before. So a company like Nubank that is a fintech provider in a growing population region, whereby that population is seeking solutions like they have to offer, positioned perfectly. Many of us in the UK or even the US or, alike countries kind of take this for granted, this idea of a mobile-friendly, app-powered banking experience. I myself have access to all of my banking requirements via my phone. And in particular, I have Monzo, which is a big fintech company here in the UK and in Europe as well. But this is not commonplace for Latin America, and the few providers that do actually offer mobile services, the experience is usually pretty poor. But Nubank have a solution, and it's absolutely loved. They have such strong customer loyalty. And not only is it the largest and the most popular, but in many regions, it's actually the only mobile banking provider. I read something crazy that went something like Nubank actually serves half of the adult population in Brazil. So clearly they are doing something right. And that is what Warren Buffett's seeing here. They seem to have a very strong moat, a competitive moat that gives them a real advantage. And you've only got to take a look at the customer growth numbers to see just how much the people of Latin America are loving this. Honestly, the growth has been exponential. And of course, we can then see this customer growth show itself in the customer's revenue profile, which is continuing to grow at more than 100% year over year for basically every quarter over the past few years. Remember as well, like with a lot of fintech companies, they don't have physical stores like traditional banking systems do, which means their running costs, their operating costs are very minute. And they pass this on wonderfully to their consumer. Their offerings are very affordable, very cheap. And actually, this wasn't really the case before in these regions. Before Nubank came along, a few banks used to dominate the market entirely, and they actually charged excessive fees. It looks like their growth is not going to be slowing down anytime soon, and they are actually planning to expand both vertically and horizontally and into new markets like Chile and Mexico, where right now, half of the population actually doesn't have access to a bank. They are unbanked. So there is huge potential. The total addressable market is large, and they are capitalizing on this perfectly. Now, I'm definitely going to be putting this stock through my own checklist to see if I actually want to invest into this position or not in my own portfolio. If you currently have the pain point where you don't really know how to research stocks, you're not familiar with a strategic step-by-step process, which you absolutely should be following, I have left a link in the description below to my workshop where I will talk you through all of that. Next up, we have a company that I do think you've heard about before, but it's definitely worth looking into. And then after that, we're going to do one more, and that's going to be a company I very much doubt you've ever heard about before. This next one is Shopify, which is of course an e-commerce platform that provides retailers with tools to run online stores. And like with New Holdings, Shopify has also had a very good 1 year stock performance. Shopify have not had the easiest journey to date, but they are one of these companies that are positioned very well to actually benefit from this upward trend that we are seeing, whereby more and more of the population are actually deciding to start online businesses. Their revenue growth has been very impressive, and it's happened over a very short space of time. And this revenue growth can actually be attributed to higher demand, strong customer retention, high engagement rates, etc. And remember, Shopify are an asset-light business, which does then mean they tend to have very good, very healthy margins. But what I would say is that their profitability seems to be a little bit all over the place, and I would definitely look into that a little bit more. Like with many growth companies, Shopify have also started getting themselves involved in artificial intelligence, looking into ways how they can integrate AI into their business to then benefit their consumers. Literally every company is doing this right now, and if they're not, I think they're really missing out. But Shopify have been integrating generative AI into their platform through initiatives like Magic and Sidekick. So I do think this shows that they continuously are pushing themselves to grow. They are a forward-thinking company, and these are things that I really like about Shopify. And if they are able to make the experience way better for their customers through this these generative AI tools and solutions that they have to offer, then this could potentially mean that Shopify becomes more attractive and their user retention goes up. And one more thing that you should definitely be aware of when it comes to Shopify is they have so much customer data. And if they leverage this correctly, they could have a real competitive edge. We have had recently, like with many companies, Shopify's Q4 earnings come out. And it's safe to say that the market didn't really react too well because their guidance came in for Q1 2024 a little bit light. The market didn't react very well to that, and the stock did plummet a little bit after that. However, if you have done your thorough research into Shopify, you like what you're looking at, and again, if you need help with that, there is a link in the description below. This could just be a very, very good buying opportunity. And there has been many times in the past with Shopify where the stock has gone down and it has recovered and then some. But of course, past performance doesn't mean future performance. We cannot predict what the market's going to do. Now, this last one on our list today is a company that, I won't lie, I hadn't heard about until very, very recently. But it's an interesting company, and I definitely think people with a high risk tolerance that want these sort of growth stocks in their portfolio, they should definitely have a look and see what they think of this one. And it's a company called AppLovin. This company focuses on building a software-based platform for mobile app developers. They help mobile app developers get their apps discovered and monetized through advertising. And they kind of split their business into two main categories. So they have their software platform and then their apps. The software platform that they have is their core business, and that actually accounted for 58% of the revenue in the third quarter of 2023. So it's the most significant section of their entire business. And this is the area that is still in the particular high growth mode. AppLovin recently posted their Q4 earnings as well, but unlike Shopify, the market loved what they had to see. They managed to beat both estimates on revenue and EPS, and the stock went shooting up. AppLovin is definitely not a company that is well known like Google, Apple, Amazon, even Shopify. They are a relatively small company, relatively unknown at the moment, but they do seem to be providing a solution to a real world problem that mobile app developers are really seeing. Their free cash flow has been jumping significantly higher recently, and in their last earnings, it was $350 million, which actually represented a 76% growth from the prior quarter. And as with many growth stocks, like we just saw with Shopify as well, AppLovin are also investing into their new AI-powered ad services for their customers. They have also been buying back a lot of their own shares. Now, share buybacks are, of course, one of these things that some investors really love because it shows confidence and future growth in the company. Others really don't like it as much. Let me know what you think about share buybacks in the comments below. But AppLovin have not been shy to buy back their own shares. Right now, however, AppLovin don't have the biggest market share. I think they're sitting around the 6% mark. Could be wrong on that, but it's not massive. And there is also a lot of competition. So these are risks that you're going to want to investigate further, and please bear them in mind. Remember that my workshop is linked in the description below if finding and researching stocks is a pain point for you. Until next time, keep investing, keep analyzing, and don't forget to hit that subscribe button.